What is good, guys? It's Rey-Jay back with another video. And in this one, I'm going to be breaking down what's going on with the overall market, what's going on with SPY, Tesla, and a couple of other tickers. I'm going to talk about why on earth tomorrow is going to be a very important day for the entire market as we have CPI data coming out and what the data is still suggesting about the report. I'm going to break down how it could affect the markets, what you should be watching for going into tomorrow for all these different tickers. But before I break into all this information, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull and deposit any amount of money into the account, you are guaranteed up to 6 free stocks. If you deposit $500, you're guaranteed 20 free stocks plus 6 months of level 2 data, which is very helpful for trading. And then you're going to get 70 free stocks and 12 months of level 2 data if you put in $25,000 or more. This offer ends in just about 7 days, so check it out before they run out. Anyways, let's break down what's going on with the market. So, when it comes to SPY, this thing has been uptrending quite nicely. I was talking about this support right over here. I told you if we broke this, watch for a push for 462 at resistance. If we broke below this, we would turn a bit more bearish and we could have seen this like breakout area being tested right over here. I also told you guys that I thought that SPY would most likely hold up and possibly get a little upside thanks to how the market was looking. And what happened was we ended up getting an even bigger than expected move to the upside because the market didn't just consolidate, it actually pushed up even more. And this could be because Wall Street knows what's about to happen. Could they know that the market's about to pump, or could this just be a big fat trap? So I'll be breaking that down in just a few minutes. Let's first talk about tomorrow. For tomorrow, we have CPI coming out an hour before the market opens. The two most important metrics will be core CPI year over year. We want this to be 4% or lower. My guts tells me it's going to be below 4% looking at the data. And then the CPI year over year should be at 3.1% or less. My guts tells me it's going to be 3% or 2.9%, somewhere around that range, a little bit below expectations. And looking at the data, there's a very good chance that that is going to happen. Now, let me mention that I am not a fortune teller. I don't know with 100% certainty because CPI is manipulated. That's why I mentioned earlier on that, sometimes playing CPI can be risky, to be very, very careful. You don't always know what's going to happen. And if I were to play this, I would not like go all in or just go like crazy. I would just like limit how many funds I play on days like this. But just know that my view is still consistent despite me giving you guys a very healthy warning about any piece of economic data. My view is still the same. I still favor upside after CPI. I'm going to break down exactly why. So, one thing you need to remember is that what on earth are the majority of people doing? Let's just go over this. Okay. On the coming Friday, we have a 2.45 put to call ratio on SPY. We have over 4 million puts and just under 2 million calls. Most people have these puts. They're shorting the market, betting the market's going to drop. For the 22nd of December, right here, we have a 3.22 puts to call ratio. The majority of people are betting that the market's going to come down. Over 658,000 puts and under 200,000 calls for that day. And for the last Friday of the year, we have the same thing going on at 1.52 puts to call ratio, over a million puts and just under 600,000 calls. Once again, the majority of people are shorting. They're betting there's going to be something that's going to crash the markets. They're now thinking it's going to be CPI. And the question is, will they be right? Will they be wrong? We'll just have to find out. But the data I have, the data I'm looking at suggests that we're going to get a decent CPI. One of the reasons is because of the correlation between the price of crude or looking at crude futures relative to CPI, right? Now, is this the only factor that affects CPI? No, but they do have a tendency of being correlated. If you don't believe me, just look at this chart, right? They came down together during this phase, came up together, down, up, down, up, down, up, down, up a little bit, and then back down again. But the reason why I'm calling this out, there's a very important reason why I'm basically mentioning this. Let me just try to enlarge this just to show you is when you look at the data, okay, CPI is coming out for the month of November. November is already over. CPI, it takes like 2 weeks for us to get the CPI report. It's going to be for the month of November. We have the crude oil data. We have it for November and December already, although December is not complete. So let me just show you. So right here, if we look at September, okay, crude oil was at 89, CPI was at 3.69. Okay, what about October? For October, crude was at 85, so it came down a bit. CPI was at 3.23. CPI also came down. Then for November, we don't have CPI yet. It's about to come out, but crude came down to 77.35. So crude is dropping and dropping and dropping as energy is dropping. This tends to be a big factor in affecting CPI. On top of that, for December, it's also dropping again. It's now at like 72. It's continuing to drop, which suggests that this could lead to more downside in CPI or increase the odds that it's going to be below expectations. Another factor would be the fact that this trend has been very, very downwards for CPI. You guys could see this. Core is being a little bit more sticky, like at least like at the very end phase, but CPI has been on a big downtrend. We had a little increase between, I would say, July and August, and then since then it's just continuing to creep back down, and the trend has been in the downwards direction. On top of this, one thing I think that's a very big factor is when you look at the US all grades, all formulations retail gas prices. This is the gas price per gallon on average in the US. Okay. We tend to see some interesting trends. So when you look at CPI, you'll notice that July is when we had an increase, right, in CPI. July and August were when we had the increases. Well, in July, we saw gas prices go up on average by 13 cents. In August, they went up a little bit, just a bit, and then September is when they stayed the same. And notice how similar this is. September, they stayed the same. Then they start coming down in October to 3.74. So they drop about 21 cents. Then we started to see CPI dropping. And then what happened in November? We had the biggest drop for the entire year in November, right? For November, we saw gas at 3.44. That's about a 30-cent on average drop. I never saw it drop that much this whole year. Okay. And this is just according to the data. I know people may not trust it. They may think it's sketch and this and that. Completely understandable. I don't trust the data either fully, to be honest with you. People call it the CPI for a reason. But like I said in my previous videos, I just have to go through the data. I have to just be honest with you because this is what the market is going to go based off of. We had the biggest drop in gas prices, according to the data, in November of 2023, the biggest drop we got for the entire 2023 month over month from this data. And you guys can see the correlation, right? We got an increase in July, an increase in August. It stayed the same in September. Then it started to go down for October. If you look at CPI, increase in July, increase in August. September stayed the same. Then we saw a decrease in October. It's a very, very similar correlation the market's pumping today? Is it because they want retail to suspect it's a trap and we're going to crash? Or could it be because Wall Street knows what CPI is going to be and they're getting in early before a big move to the upside comes? Okay. I don't know for sure. I'm not going to promise it, but I do want to note that there's a good possibility, a high probability that CPI is going to be decent. Would I bet my entire portfolio on it? No. Would I bet half my portfolio on it? No, guys. I wouldn't bet way too much on any CPI in general, which is why I gave you guys like a warning uh, about that because CPIs could be risky. The numbers are manipulated. But even though I don't truly know, I'm not a fortune teller, I will tell you that there's a high probability we're going to get a decent CPI. And my word has not changed. I'm still very consistent nonetheless. The market already priced in Jerome Powell essentially like announcing that they're not going to be raising rates again. They're not going to be raising them at least for the remainder of the year. So there's a very good chance that we're going to get some decent catalyst for the markets. I don't know if FOMC is going to be a factor that could push the markets more because of the fact that this is already priced in. But CPI technically is not priced in just yet. So we'll be watching for that. The market has a fear and greed index at 68. It is well above the neutral area, getting closer to extremes. And we still have market momentum at extremes, another technicals at these extremes. We'll be watching to see how this is affected as time goes on. And then to add on to this, I just want to mention that the market's still holding up decently. What do I think is going to happen? Okay, so it's going to depend on CPI and such. I think that core CPI is going to be below 4% at 3.9% or maybe a little lower. And I think that CPI is going to be very important because we're very close to something interesting. So the Fed, right? Jerome Powell, these Fed guys, they were saying that we need to get inflation to 2%, right? That's their target goal. What if it's at 3%, right? 3% is very close to that 3.1%. What if it's at 2.9%? That would be really bullish if that's the case. I think people are going to go crazy if inflation, at least on paper, is back in the 2% range. That would be pretty insane. So I don't know for sure, guys. We'll just have to see what the data suggests. If I were to give you guys a prediction, okay, let me be honest with you. Just because I like to be unbiased sometimes, let me just mention that if CPI is hot, although it's looking very unlikely, SPY is going to come back down towards this orange trend line and retest 455. Do I think that's going to happen? I lean heavily against that. I don't think we're going to get a big rug pull. If we're bullish, if we get a CPI around like 3 to 3.1%, I would say 3% sounds reasonable. We could see this thing hit 465, maybe a little higher. And then tomorrow, if we get 2.9%, if it's somehow below 3%, the market's going to see the big two. The market's going to go crazy. And then Wall Street's going to say, hey, look at all these shorts. Well, if everyone's shorting, if everyone's betting the market's going to crash, they're going to do the opposite. And that's why I think that if CPI is at 2.9%, SPY could hit 467 tomorrow, possibly. It could be a crazy, crazy move. Um, do I think it's very probable? Yes. I think the market's it has more room to go, and they'll keep trying to squeeze shorts no matter how crazy the charts look. So with that being said, there's always a bullish and a bearish case. I do favor the bullish case. I think there's a good chance we're going to see some upside. But just to be safe, like I said before, I don't know with 100% certainty. I can't predict the future all the time. I don't know what the numbers will be. That's why it's important to manage risks, no matter how confident a person is when trying to day trade or trade or do anything like that. Okay, so I think we're going to see some upside. I think we're going to see SPY hit 467 over the next 2 weeks. Could even happen tomorrow, depending on CPI. I still favor the upside. On the QQQ, okay, if CPI is hot, and we get a CPI that's hotter than expected, that's going to be bearish. QQQ comes down to 391, maybe even 390 or below that. Do I think that's going to happen? The answer is no. I don't think it's going to happen. I don't favor that. If we're bullish, if we get a decent CPI based off the numbers I named, I could see this thing testing 400. I could see it. We might see 400 very soon. So what do I think is more likely? My prediction will be 400. I think we might see this thing push up for 400. We might see a squeeze. We might see CPI lead to more shorts getting squeezed. Just to be safe, make sure you watch the charts and see, look at what the numbers are first. But I still favor this view based off what we're seeing. On Tesla, it all depends on CPI. If you get a hot CPI, if CPI is too hot, Tesla's going to get rug pulled back down to 233. If CPI is below expectations and the data I showed you suggests that's most likely going to be the case, Tesla could be pushing back into this range in the 244 area. If it breaks this white trend line right here, if we get a breakout, could be looking for 247 to 250 all over again. So we're going to be watching to see if we get some kind of push to the upside. Do we get some kind of breakout or not? I think it's going to be very important to watch what CPI causes. My gut tells me, and I favor the upside. I think we might see Tesla push back up. What's tricky about Tesla sometimes, though, is there's been so much bad news that came out involving Elon Musk, the unions, not to mention some negative things said by Bernstein. And I also saw some news about Tesla's new incentives by basically just reducing their margins to get more sales for an end of the year push. Uh, so, with that being said, guys, there are external factors that affect Tesla. It is a little trickier sometimes, but I do favor the upside. I think we might get a bounce tomorrow based off CPI. I think that's going to be a very big factor. On Nvda, just want to call out something interesting. Nvidia is still holding up. It's not officially really bearish unless we break this blue trend line, then I would turn more bearish. We're technically uptrending. We hit this support here, we bounced, we bounced, we bounced. We're making higher highs and higher lows technically. And we have this imbalance up here at this 482 area. Will we get a decent CPI? If we do, this thing is going to be pushing up for at least 480 plus to 482. It could make a big move to the upside off a good CPI. If we get a bad one, it could lose this blue trend line. We're going to be breaking down if CPI is too hot. My guts tells me Nvidia is going to hold up and try to push back up towards this imbalance, get back above 475 soon, then eventually 480. I still favor the upside on Nvidia, and I think that there's a very good chance it's going to attempt to come back. I also want to note that on Nvidia, when you look at, hold on one second, the 4 hour is looking a little weak, but we're still holding our 200 EMA. It could make another attempts to push thanks to the data that's coming out. It's still holding above the 50 EMA on the daily time frame, so I could see its attempts to go a little higher just temporarily because of CPI. Does this mean it's going to be bullish for the next 2 weeks? I can't guarantee that, but I'm just talking about tomorrow specifically, because tomorrow could be a completely different day once CPI is out. And then last but not least, I just want to mention that, where is it? Aapl, the chart looks like it has some potential. So the daily looks bullish on it, right? We have a bullish looking daily candlestick. We have a gap to fill all the way up there on the daily. And then let me pull up the Aapl chart right up here. I just want to mention that Aapl came down off some bad news, but it's doing okay. Is this about to be a flag? Are we flagging on Aapl? Are we about to just flag like this and just start breaking down? Or are we about to see a big bounce? This all depends on different factors and CPI. The bearish case would be like this is forming like a bear flag and we just like break down like that. The bullish case would be that this is just an accumulation. This is just like a reaccumulation down here, and we're about to just bounce and push right back up, try to fill this gap and try to retest this like wedge, maybe even try to get back into it. That would be like the more bullish case. We'll just have to see if Apple gets a monstrous bounce or not. This could be a trap, so you just want to be very careful. Now, what do I think Apple's going to do? If CPI is bullish, if we get a bullish report, Apple could be pushing back up to 195, if not to try to fill this gap in the 195s. If it's bearish, we're going to be losing 191 and start pushing back down towards these lower levels like 190. Then we have like 188. I think my guts does favor it's going to push back up and try to retest this wedge to at least 195. All right, guys, so that's it for the main five I typically go over. Now let's just talk about a few others. I just want to call out that NEO. I know this stock has been beaten up like crazy, but it held $7, and we're seeing another reaccumulation. I think that I'm quite bullish for 2024 for the stock, and I think that we're getting very close to a weekly bullish cross in the PPO. I think it's going to bounce soon over the next couple of weeks, especially heading into NEO Day. The Russell 2000 looks bullish, still holding up nicely. Uh, we could see this thing approach 190 very soon. I think that's going to be a good target. CPI could be the thing that helps this thing just launch even like past that. On Microsoft, I just want to call out. I'm going to pull up the 4 hour time frame. On the 4 hour, I could see that we have this gap up here. It's also kind of like range bound. We actually hit the bottom of our range. We're trying to push up. You could argue this is like a triple bottom like formation. It depends on CPI. If CPI is hot, it's going to come down to 360 to test the 200 EMA. If you get a decent CPI, it could balance, forming like this nice double bottom and trying to push up like this, back up towards like 375. I think that it's going to push it for 375 plus tomorrow. Could even break past that depending on CPI. AMD still holding up nicely. There's no sign of this thing dying out just yet. And because we managed to break 132, there's more potential for it to get even hotter. So if you look at the weekly on AMD, I wouldn't be surprised if it keeps going. I mean, we're technically getting closer to this next resistance around 141. That's going to be our next level, 141. So if it keeps going, watch for 140 to 141. If it gets above 135, and there could be another push depending on CPI, still is a possibility. The VIX is still not looking that great because although it attempted to like bounce a little bit today, the 4 hour is still looking kind of weak. We're kind of stuck in the 12s. Didn't really move much, so we'll just have to see what it does tomorrow. The dollar attempted to push up, but it hasn't broken our 200 EMA yet. And it's actually starting to turn on the 4 hour. So this might actually start dropping because of the market pushing. Watch and see if it holds 104. If we lose it, 103.75 and 103.5 are next. For Coinbase, we were talking about some kind of pullback coming, but an eventual break to the upside. We have a gap to fill now. Coinbase could be pushing back up to 146. I don't think it's dead just yet because if you look at the weekly time frame, there's a chance it could push more. We haven't really reached our 200 EMA yet. So we'll just have to see if Coinbase could kind of like come back down and then bounce. CPI could launch this a little higher. Also, any news regarding crypto. On Alibaba, as long as it holds above 70, I think it's going to be retesting 75. We need this thing to hold 70. If it breaks 70, I would turn more bearish. Because it's holding it, it could bounce for at least 75. For Google, we were talking about some potential downside. It actually came close to our target. We were talking about it retesting that 135 area. I have to go back to the chart just to show you that level, though. I think it was actually the daily. I think I need to go back to the daily chart to show you what I was talking about. And you can see right here, we have a bullish looking daily candlestick. It might actually try to fill this gap up to 135. Maybe Google bounces thanks to CPI, who knows. For Amazon, a bullish looking daily candlestick. If we're bullish, it can retest 147, maybe even 150. We will see what CPI brings. Retail are kind of like eyeing a head and shoulders on Amazon and a potential sell off to come back down to 140. But we'll see if this thing bounces and they try to surprise retail. Just be very careful and wait and see what CPI causes. For Meta, it came down to our target. It touched this daily 50 EMA, then bounced as expected. Now, for Meta, we're going to be watching to see if we could hold above 320. If we hold this, look for a bounce. If we fail to do so, we could turn more bearish from a technical standpoint. Will CPI launch this back above 332, or are we going to fail from here? We'll just have to wait and see. But anyways, guys, that's it for this video. Thank you all so much for listening. Have an absolutely spectacular rest of the day. And I hope this video was helpful about what I think may happen with CPI. Let me just remind everyone that I am not a financial planner. I don't know with 100% certainty what's going to happen. I can't always predict everything perfectly because data could be manipulated and sometimes unexpected things can happen. But despite that, I have conviction that we're likely going to see some upside. I think the data suggests we're going to get a good CPI and there's more upside coming to the markets. I think that's very likely, and I still favor that view. So we'll just wait and see, but just know that that's what I think, and please do what's best for your own portfolios. Nothing else is financial advice. Have a great day. Have a great rest of the week. And I'll see you guys tomorrow morning to report what's going on with CPI. Thanks again, guys, and peace out.